Good morning. Thank you very much for joining me today. So we're going to be talking about the analytical modules, and I'd like to discuss a little bit about how we can use the numbers and figures that are available in these modules to help you analyze and understand and figure out the trends a little bit better. Now, the analytical modules are mainly available here under the analytical tools, obviously. However, you can access these numbers and figures on different areas of the system as well. I'll try to show you all the areas that you can access these numbers. So let's start with the website. So if you go to your website, there are several different areas where you have analytical data available. Primarily under the market report right here. So depending on the areas that you have selected as your focus areas, you're able to display analytical module information on your website. So this could serve as a reference point on your website, a general reference point where you can direct people who are interested to your website, where they can see the latest market trends and information for these specific markets right there. So for example, here I'm looking at the Whitby market analysis. So we have the price appreciation within the last 1 year, and then we have the benchmark price for all property types. So I'll explain to you what these mean, benchmark price, and what we mean by all property types, and then how we can break these down. Then we have the last 3 years price change for Whitby, 5 years price change, and 10 years price change. So it's important for us to be able to understand the difference between these different variables as well. Then we have the different property types with their benchmark price, as well as their growth trend and the average price, average DOM, as well as the market activity. This one is a very important chart because you can really see how the market is shifting and fluctuating, and you can really compare year to year and month to month for several different derivatives that you can take out of this chart over here. We also show you the most recent activity, as well as the average sold price for the most recent properties that were sold in the market. So this is quite a general you have available over here. So I'll come back to this. When you look at a listing, so let's go ahead and pull up a listing. So this one requires login. Let's check out this one, for example. All right. So for example, when you look at this listing, we also give you some statistics over here as well. So where you have the average sold prices, there's the average DOM for a neighborhood for the same property type. So this is a detached property type in the brokerage community. So this is also for detached properties in the same community. So you also get these numbers over here as well. We then have the investment portfolio. So basically this will show you how the growth trends look like for this type of property in this area. So you can also use these numbers for basically arriving at some conclusions if you're looking to also consider the growth and capital gain potentials of this property. Okay, so we again have the benchmark prices available over here. We have the different property types with their benchmark prices. The growth trends as well are also basically graphed for you right here. All right. After that, we have the backend modules where we have the market report. This is where you can generate market reports for different market areas. So for example, I can select Vaughan at the top here when you want to select the city, and you can pull up the Vaughan market report right there with all the indicators in here. You can also select a property type, or you can download this report as a printable and shareable infographic, which is branded to you and ready to be sent out and shared. So this is one module that's available. Then we have the community report, where we have the all the report for the communities. The same report basically for the communities rather than cities and municipalities. And then we have the Market Watch, as well as the Community Watch, which are based on live data. Then we have the CMA, obviously. So when you're generating the CMA for a property, you would also have access to the same data as part of the CMA as well. So you can see that we're using these data and information pretty much in many different occasions and many different modules and features, which they can add value in understanding what we're looking at right there on this spot, so we don't have to go back and forth between different modules. So they're available to you, accessible to you, and you can use them for your analysis, as well as your enable you to better help your clients understand what they're looking at right here. All right, so let's go back to the basics and take a look at what we have right here. So I'd like to start with the market report. This includes pretty much all the information that we need, and then we can see how the different modules can help us understand and use these numbers to help us understand the actual facts and figures that can be understood and pulled from the information that's available in front of us. All right, so the first question is always this: what is a benchmark price, and how is it different from the average price? So the benchmark price is a very, very important indicator of the market, and it can allow us to understand, basically better compare the market values in different areas of the market. So the keyword here is comparison, as well as better understand the trends in a market. I'll give you an example. So the reason why we have benchmark price for analyzing trends as well as for comparison purposes is that average price or median prices are not fit for that purpose. Okay. Traditionally, these numbers, the average and the median numbers, were it's not even tradition. It's just that those are the easiest figures to understand, and therefore they're more widely used in market analysis, not just by agents, but by a lot of other stakeholders in the industry as well. However, it can be average prices and median prices. These statistical numbers can be misleading in certain occasions. So I'll give you an example. Especially when you're more focused in an area, these mistakes could be more obvious. So let's imagine a neighborhood in one of the cities in the GTA. All right. So in that neighborhood, we can imagine that the typical property types, the usual properties that you would see, would be priced at around, let's say, $1 million. So you would obviously guess that when these properties are selling at, more or less $1 million, the average price for that neighborhood would be $1 million. So now, so let's say in January we have $1 million as the average price, and then in February again it's $1 million, and then March we have a property come to market that's been newly built, and it's a custom built property, and it's priced at $2 million. So this property, when it comes to the market and when it sells in March, the average price is going to go up to, let's say, $1.2 million. Now, the mistake that can happen here is that you might just take a look at the trend in the average price, and you are going to come to the conclusion that in March the market has increased by 20%. Which is completely wrong. The market has not increased in any way. It has been that 20% increase in the average price, average sold price, is the result of that one outlier. Even if you tend to look at the median numbers, the fluctuation is going to be less than the actual average. However, it is again going to be affected. So you might consider that the market has grown by 10%, but it's not the case. The market has not grown in any way within 1 month, right? So that's the fluctuation that has happened there. And then what happens in the next month when we go back to the same properties that we're selling for $1 million, then the average price is going to go back to around $1 million. So you might again come to a conclusion that the market has declined by 20%, which is definitely not the case. The case has been that during these 4 months, the properties, the market's been quite steady in the area. So that's where the average price can be misleading, because it depends on the fact that what properties are on the market in a specific area, and obviously these effects are going to be diluted as we grow the area of focus. So for example, if you're looking at the GTA in general, so for example over here we're looking at the GTA, so it's taking all the properties that's been sold in the GTA. Obviously, if you have a few properties that are outliers here, they're not going to be able to move the average price that much, even though they would, but it's not that much, right? So you're not going to sense a big huge fluctuation there. However, if I go to C14, for example, and I am pulling up Toronto C14 as the market, then a few outliers can really move the average sold price right here. Even worse, if you go to a community, if I go to community report, and for example, I pull up, let's say, Willowdale East, right? So that's a small portion right there. So we have 237 properties sold in that area. So imagine if 20 of these were suddenly a let's say a new condo that was launched and sold during that month, for example. So these are things that would make the average price prone to mistakes. However, it is a viable statistical component, and we need to definitely consider average price as one of the factors when we're analyzing the market. Now, in order to help us achieve a better understanding of the trend, as well as if we want to compare. Now, I gave you an example for the trend, so so now you know what would happen if we have an outlier sell within a specific month, and we by mistake think that the properties are, let's say, the market is growing by 20%, which is not the case. Now, for comparison, it's the same thing as well. So let's imagine in March, where that $2 million properties sold in that neighborhood, you compare that neighborhood to another neighborhood which their property sells for an average of, let's say, $1.1 million. So in that month, you will think that the properties here in the first community are more expensive because the average price is sitting at $1.2 million, and the other neighborhood is sitting at $1.1 million, which is not the case, because in reality, the first community's properties usually sell at $1 million, which are cheaper than the second community there. So you can see how in terms of comparison, you might be mistaken here as well. So that's why we have the benchmark price. What does the benchmark price say, and how is it calculated? So the benchmark price is also a derivative of the average price, but it's more engineered in terms of arriving at this number. How's that? The way that they do benchmark pricing, the way that they calculate the benchmark price, is that they look at the typical property of a neighborhood for every specific neighborhood. So they come from bottom up rather than going from up to bottom. So they come from the neighborhoods, and they look at neighborhood A, for example, and they see that the typical property in this neighborhood is a 75-year-old raised bungalow with the frontage of, let's say, 40 feet or 50 feet, and a finished basement, 3 bedrooms, 2 washrooms, etc., etc. So they take into consideration the most important features of properties, features of typical properties. So let's say 90% of the properties in that neighborhood are like this. So that would be a typical property right there. So they would take the most important features of those properties, which could determine the price, and then they would look at the actual the sale prices of those properties, and they will arrive at weights for those features, and they will price the properties based on the availability of those features. Right, so that's what they're doing. They're basically looking at the features of the typical properties and then coming to a price right there. So let me go ahead and pull up an area. So let's say, for example, we're going to go to Aurora this time. Right, so this is the Aurora property market report right there. The average price is about $1 million there. However, the benchmark price is $924,000. So that means that the typical property in Aurora would sell for $924,000, most probably. All right. So that typical property is basically, it's been calculated by looking at each individual neighborhood in Aurora, seeing what type of properties we have here, what sort of structures we have there, and then we can arrive at this number right there. Now, if you look right down here, you can see that we have different property types, and for each one, we have a detached, well, basically a benchmark price. So now, if we're looking at a typical detached property in Aurora, we would be looking at this benchmark price. If we're looking at a typical semi-detached property in Aurora, we would be looking at this number right there. If we're looking at a typical townhouse or a condo, we would be looking at these. And the accumulation of all of these would come to $924,000. So this is how you can see that they arrive, how they can arrive to at the benchmark price and how it's calculated. Now, let's go back to our example. The same neighborhood that we had in January and February, they were selling it around $1 million. So if you're looking at the benchmark price there, they're only taking into consideration the typical properties. So let's say the benchmark price is $950,000 in that neighborhood. The second month is going to be still $950,000. Now, the third month, when we have that $2 million property come to the market, guess what? For the calculation of benchmark price, that property isn't even going to be considered because it's not a typical property. Because it's not a typical property, that price is not going to be considered, and therefore for March, we're still going to stay at $950,000. So the fluctuation that had misled us in when we were looking at the average sold price did not happen here, and therefore when I'm looking at the benchmark price, I can see that the market has been steady. Now, even if I want to compare the two markets, let's say community A is $950,000, the benchmark price, and community B is, let's say, $1 million, the benchmark price. So immediately, when I'm looking at the benchmark prices and I'm comparing the benchmark prices, I can immediately find out that typically, community A is cheaper than community B, typically speaking. You might find one property in community A that's much more expensive than any other properties in community B, but typically community A is cheaper than community B. Even in March, when we have that $2 million property hit the market, the benchmark price is not going to fluctuate, it's not going to change, and we can still come to the right conclusion that community A is typically cheaper than community B. So that's the importance of benchmark price, because it is not going to mislead you. Now, is it the price that you would look at when you want to price a property, or when you want to see whether a property has been priced correctly in the market or not? No. This is not the only number that you would be looking at. For that, you would have to look at the benchmark price, you would have to look at the average price, you would have to look at the DOM, the inventory, the season, the trend, the all of that, all of those factors play a role in determining whether a property can be priced at $1 million or $1.2 million or $1.9 million, or whether a property that's been listed for $950,000 is a fair price or not. So that is where your expertise is going to come into play. Your understanding of the property quality is going to come into play. Your understanding of the neighborhood is going to come to play, as well as these numbers and figures right there. But you know how to use these now. So if I'm looking at the detached market, detached properties in Aurora, I would say that I would most probably be expected to spend about $1 million plus purchasing a detached property in Aurora. Can I find it in an $800,000 detached property in Aurora? You bet. But they are rare. Can I find $1 million properties in Aurora? A lot, because that's typical right there, right? Can I find $3 million properties in Aurora? Of course, but they are rare as well. So that's where this comes from. However, if I'm comparing the different property types as well, I can see that semi-detached properties are pretty much about 25% cheaper than detached prices comparison, right? Now, because the trends are now actual, I can see that the 3-year growth of the detached properties in Aurora have been almost steady. So we're pretty much at the same price as if they were 3 years before. You know why. However, semi-detached properties have grown for about 3% there. So this one was negative 1.65. This one was positive 2.84. If I'm looking at townhouses here, for example, we were at negative 0.56 as well. However, condos have grown by 8% right there. So I can see the growth trends here as well, because I'm looking at the growth trend, the actual growth trend of. However, if I were looking at average sold prices, I might be coming up with numbers that were much steeper than these numbers right there. Now, let's compare two areas. I want to compare Aurora with, let's say, Richmond Hill. All right. So so these are two neighboring areas, Aurora and Richmond Hill. So remember these numbers: $925,000, $1 million, and then pretty much about -2, 3, and -1 growth trends plus an 8% growth trend there. Now we're going to go to Richmond Hill. So I pull up Richmond Hill. Now I have Richmond Hill property market report. Now the benchmark price here is $1 million, right? So that immediately would tell me that properties in Richmond Hill are more expensive than properties in Aurora, but not that much. A little bit more expensive than properties in Aurora in general. However, if I'm looking at the detached properties, I can see that the properties in Richmond Hill are significantly more expensive than Aurora, right? And I can say that with confidence because I'm looking at the benchmark price right here. The growth trends minus 2.7. So the hit, the ditch in the downturn of the market in the past couple of years has been a little bit deeper in Richmond Hill compared to Aurora. Semi-detached properties have also declined by just about 0.3%, and they stand at about $900,000 there. Townhouses are more expensive as well, but we've had a 6% growth for townhouses there, and we had a 20% growth for condos here. So we can see that the condo market in Richmond Hill has been significantly more, growing more that compared to what we had, the 8% that we had in Aurora, for instance. Obviously, there aren't a lot of condos, and I wouldn't see a lot of demand for condos in Aurora. So these are, your understandings, and you could come to these conclusions when you see these numbers right there. Now, if I go across the GTA, and let's say I go ahead and take a look at Pickering, for instance. Now in Pickering, you can see that the detached properties are benchmarked at much less than Richmond Hill, $850,000. However, the 3-year growth has been 11%, and the semi-detached properties at about 15%, townhouses 15%, and condos 17%. So you can see that the properties growth trend has been on the positive over the past couple of years, and you can see that the 3-year growth has been much healthier compared to what we would have seen in Richmond Hill. My derivative out of this analysis is this: you can expect to see a lot of properties on the market right now that could be selling for less than what they were bought for 3 years ago, or at least the same price as what they were purchased 3 years ago. So you could see a lot of these in Richmond Hill, but you're not going to be able to see a lot of these in Pickering. So if you're in the market in Richmond Hill, you might be paying the same amount that you would have been paying 3 years ago right now. But if you're in Pickering, you would be paying at least 10 to 15%, 10 to 16% more than what you would have been paying 3 years ago. Or if you're looking at it from a seller's perspective, in Richmond Hill, don't expect that your properties would have gained a lot of equity if you had purchased your property in 2017. But if you were in Pickering, you can expect that you have about 10% to 15% equity gain over the past 3 years. So these are the different things that you can easily understand from the benchmark prices, and you can compare different areas, and you can see the trends a lot easier. Now, where does the average sold price come into play? I usually look at it this way. I look at the average price, and I also look at the benchmark price. The first thing that I see when I'm looking around different neighborhoods, the bigger the gap between these two usually indicates the fact that the market is hotter or is changing, right? So meaning that, for instance, in some neighborhoods, you see a lot of builders purchasing and renovating properties. And those neighborhoods, you see the average price it would be much higher than the benchmark price. If the average price and benchmark price are close, means that the property, the market is more of a stable, in equilibrium, basically. So the bigger the gap, and this would be higher, would mean that we have a seller's market. The closer these two numbers are to each other, it would be more of a level market. And then if you find an area where the average price is lower than the benchmark price, which very rarely happens in the GTA, very rarely. There were some areas over the past, especially in 2018, where the market was really slow. Some areas that you could see that the average price is lower than benchmark price, and those were areas that would be indicated as a buyer's market, basically. So this is how you can really look at these two. Now, when we're looking at the average market price for the area and we're looking at the fluctuations, I told you that, and I gave you the reason why you should be cautious looking at this graph, the average market price right there. However, this is a typical graph that is usually available for analysis of the market. That's why we have it available for you as well. So you can see the average price, especially you can compare the average price in August 2020 with August 2019. So you can see how things have shifted since last year for the same area. So for example, here in Pickering, you can see that the market has significantly grown in terms of the 1 year price appreciation when looking at average sold price. So we were at $686,000 there. Now we're at $838,000. So the average price has grown by about 20% right here. However, our benchmark price indicates less than that. Now, the average DOM, this is a big thing. It fluctuates a lot, but you can see in January and February we had the highest DOMs, and then obviously in March and April we had the lowest. We had the pandemic coming, went up again, went down again. It's going up, back up again. So you can see the trend in DOM as well. I'm not a big fan of the DOM because it could be misleading, especially with the huge number of properties that come to market and they will be relisted and relisted and relisted. Now, recently, TREP has started to give us two indicators for the DOM. One is the listing DOM, another one is the property DOM. The listing DOM means how many days has this listing been on the market with this MLS number. So if you take the property out and then in 2 months you put it back on again, that would be a new, so the DOM would start from 0 again. But the property DOM, it actually adds things up. So if you take out a property and you put it back right on, then the system is going to say that, okay, so you had 35 days on the market before it expired, and now you have 3 days, so it's 38 days in total for the property DOM. So that's a more interesting number to be looking at, and we are shifting to that as well. Now, the last piece is the market activity. So this one is the one that I particularly like. The market activity can show you the state of the market with 3 different indicators. The first graph, the blue one, would be the active listings. So that's the number of active listings. So we're looking at August 2020, for example. At the end of August 2020, there are 189 active listings. So this number of listings in Pickering are sitting in the market. So that's the number of active listings. Now, new listings are the number of properties that came into market during August 2020. So these were the new listings. So we had 252 properties come to the market during August 2020. And then the red one would indicate the number of sales. So we have 179 properties sold in August 2020. All right. So you can see that the number of new properties that came to market exceeds the number of sold properties. And we have quite a few properties remaining in the market as well. Now, right now, you can see the gap here between the green one, which is the new listings, as well as the red and blue, which are the active listings, as well as the sales here. So if I'm looking at the green versus sales, I can see that here in this month, we're seeing a lot more properties come into market. Let's rewind back to, let's say, April 2020. You know what was going on in April 2020, right? So back then, we had only 135 properties come to market, even though it was the beginning of the season for real estate, but we had the pandemic going on. So not a lot of properties were coming to market, and only 56 properties sold. So a lot less properties were selling there. The gap here is indicating, well, basically the gap here is indicating that we're listing a lot less properties. So inventory was dropping while sales were dropping in the same pace as well, compared to March 2020, where we had a large inventory and a large number of sales. So immediately both dropped, right? Now, a lot of people might have asked or might have thought that once the pandemic hit, the market should have declined. The sale prices should have gone down immediately. However, that didn't happen. Sale prices were pretty much stuck to what they were, the average sold prices, etc. You didn't see a steep decline. You did see a small little decline, but that usually isn't an indicator of a market collapse. You would see markets, prices drop really fast and sharp. That didn't happen. Why? Because even though the number of sales had dropped significantly, at the same time and pretty much at the same by the same decline, we had seen the number of the number of listed properties drop as well. So supply and demand dropped together. Usually prices drop significantly when supply stays the same or increases while demand is decreasing. But when both of them drop together, pretty much you could expect that the market would hold in terms of the prices. And then when they are growing back up again, you can see that they are growing with the same trend. The gap is closing a little bit right here. So we can see that the prices can incline a little bit as the number of sales are getting closer to the number of properties that are being listed right here. Now let's rewind all the way to last year, August 2019. In August 2019, we had 241 properties sitting in the market, 204 properties come to the market, and about 148 properties selling. So you could see that the blue line was above. That meant that properties would come to market and sell, but a lot of properties would stay over and carry over to the next month more often than what we are looking right now, right? So we can see that the inventory is a lot healthier this year compared to last year, but the sales and the inventory were closer last year, not by a big difference, but a little bit closer compared to this year. So you can see that the market is basically, this would indicate that the market is looking at a little bit of a we would be looking at a more active market this year compared to last year. More properties coming into market, more properties selling, and less inventory carried over. Now let's go back to Richmond Hill and take a look at Richmond Hill or Aurora. All right, so take a look at this graph right here. A very, very different market compared to Pickering. This is completely different when you look at this graph right here. First of all, when you're looking at the number of new listings, 252, so there are a lot of new listings coming to the market. Sales, 140. Look at the trend here. So we had the dip in April as well. Same thing happened here. The good thing is that in Aurora, supply even dropped faster than demand. Now, when supply is going back up, you can see that demand is going back up as well, but not at the same trend. So that could be a little bit alarming for people who are going to put their market properties on the market right now. And they could see their properties stay on the market for longer. And that's the 262 active listings that you see right there. You see a bigger inventory carrying over. So green and blue are touching, shows that properties that are on the market, that are coming to the market, tend to stay in the market, right? Even though sales is growing, it's not growing as fast as supply is growing in there. So you could see a little bit of a trouble selling your property at a good markup when if you're listing in Aurora, right? Now let's rewind all the way back to last year. You could see how dramatic things were last year, and this is why we had areas like Aurora and Richmond Hill and Newmarket, and some other areas had the more decline in the areas when we had a decline in demand in the past 2 years. So we had a lot of properties staying around in the market. 174 properties came into market in Aurora, and only 69 of them managed to sell. So you could see that demand was far away from supply. Almost twice as much properties were coming to market than selling, and properties were staying in the market for a lot longer. So that definitely was a buyer's market back then in August 2019. Over here, it's still a reasonably a reasonable buyer's market. However, it's not as easy as it used to be for buyers back in August 2019. And it's not as hard as it used to be for sellers in August 2019, but it doesn't seem that it's going the right way right here. So maybe the next couple of months, we can, if this gap continues to grow, then we're going to be looking at the same situation right here in August 2019. So Aurora, we have to be careful. Richmond Hill, not as bad as Aurora, but you could still see that the growth in supply was going up a little bit, not the same trend for sales. And then right here, we have a little bit more inventory than that, but still, we're selling almost half what's coming to market. So we can see that the gap is pretty much high here. It didn't used to be the same before. So last August, we had much less inventory and we were selling more than half. So 252 were selling in last August, but we still had a large inventory carryover. So you could see how the markets are changing. So a seller in Richmond Hill might not have the same difficulty as Aurora. So you can see how you can really use these numbers to see and find out where things are moving. Now take a look at this in Richmond Hill. The gap here, the drop here, and then the explosion in average price in June, July, and August, right? You can see the explosion right there, and you can see that this peak right here in June 2020 seems a little odd, right? So go back to my statement at the very beginning. Average prices can be a little bit deceptive. So this is a little bit too much. It's exaggerated, right? But this is, the actual average sold prices in these months right there. Okay. So this would be a good section for you to be able to actually compare and see your market statistics and analyze the market a little bit. Now, this is available once every month from TREB, and we take the same and we compile the information for you so you can see how the market is changing. You can analyze your market right there. Now, community report is exactly the same thing as well, but I want to show you a few tricks here as well. So let me just quickly show you the community. So let's say we're going to be looking at, let's say Guildwood. All right, so that's Guildwood market report for you. It's ready to be downloaded and shared if you want. However, consider this. The numbers are updated every quarter. We're still waiting for the last quarter numbers to be updated. So winter 2020 is the last set of information released by TREP. They still haven't released anything for spring 2020. So we're already into fall 2020 and we are waiting for spring 2020. So it should be coming in any day now. So once they come in, we would be able to add those numbers here. So if you're looking at this chart today, this could be a little bit outdated. So I would suggest, if you want to use these charts, to wait for a couple more weeks until we have the spring 2020 data also added. That would be the best time to use these charts for the neighborhoods when you're looking at the Guildwood neighborhood. After a couple of months, again, that would be a little bit outdated as well. So this is the shortcoming of neighborhoods when it comes to analysis and statistics. But there's a good reason why TREP provides that information quarterly. For statistics, you need to have enough transactions to happen before you can really come to any sort of a conclusion. You can't just rely on 3 properties sold in Guildwood over the past couple of weeks to arrive at any sort of a statistical number. You would have to wait long enough until you have a few dozen property transactions. That's when you can come to some conclusions right there. So for that reason, TREP takes waits for 3 months before a quarter before they release their numbers. So there's a gap here, but once you know how to deal with it and when to use these numbers, then it should again be okay. Now, if I go to the website and we look at, sorry, where did we, yeah. So if we're looking at this property right there, so this is a detached property in Brockridge. And if you look at this number here, it's based on last 90 days transactions. Same reason. We go back 90 days in order to accumulate enough transactions to be able to arrive at an average sold price that would make sense. Otherwise, the fluctuations would be crazy, right? You could even see zeros because maybe in the last month, no detached property was sold in a certain neighborhood, especially neighborhoods that are a lot less dense. All right, so that's why we go back 90 days. However, there are other things that you could do with this map right here other than just pulling the data. This map can be a very interesting map because it's like a heat map that shows you the growth trends in different areas. So you can easily see how you can basically the different indicators here are shown. So right now we are looking at the benchmark price. So the highest benchmark prices for different property types are in these areas. Now if I change that to 1 year growth, this is the heat map for 1 year growth of all property types in the GTA. So you can see where the heat is. Well, it's pretty much all over the place. Forget about these rural areas because the growth areas in the rural areas are again, could be misleading. Why? Because 2 years ago, there was nothing there, and now there's, you know, subdivisions and sales happening there. So the growth trend could be huge compared to last year, for example. But yet again, looking into the more you know, developed areas, you can easily see where the heat is in terms of growth over the past 1 year. Looking at let's say 5 years growth, you can see where the heat is. So these are the areas for 5-year growth. All right, now I want to get into some more details. I'm going to change this to detached properties. So I want to see where detached properties have grown the most in the past 5 years. So you can see, obviously we have up here, forget about that, but down here in Oshawa, we had some heat. Over here in Pickering, then we have right here in this would be, where are we right there? So again, this is, you know, probably some subdivisions and stuff that are happening right there. But anyways, you would know if you're an agent that is in those areas. So you can see the growth trends right here, where the heat really is for detached properties. Let's look at condos now. These are the areas that we have condos in, and these are the most significant growths in the past 5 years for condo resale, obviously. So you can see how you can use this map to show you some interesting stuff here. I'm looking at townhouses. These are the areas that they have townhouses in, and I can see the growth trends here, right? So I can see where the growth trends. So if you are an investor and you want to see where you can park your money in real estate, this map can help you. This map can help you a lot. So you can see how you can pull this map up in front of your client and start experimenting and looking at this different numbers and factors, you know, and you'd be able to consider a lot more. So for example, if I had parked my money in this area, if I had purchased a property in this area, over the past 5 years, my townhouse would have grown 187%. So this is awesome for any investor out there. So it's good for us to be able to actually see these numbers and be able to compare for different property types, etc. Okay, now, in order to fill the gap, we also give you live market reports here too. So these indicators are calculated based on live information, the actual sold data that we're capturing in our database. This is not official, obviously, it's our calculations, but it's the actual numbers that we're getting. The official numbers that are released by TREB at the end of the month or the end of the quarter are basically you know, all the corrections that need to be made to the numbers would be made and then would be available. So these numbers can change a little bit, but not too much. So you can still use these numbers as well. So we have the average price fluctuation, we have the market activity right here as well. We have the DOM, we have the months of inventory, we have the total sold value, etc., etc. I don't have time to continue this to explain about these numbers, but these are familiar right now, but we will definitely cover these in another session. However, you can easily see that you could go ahead and check, you know, for example, for Richmond Hill, you can pull up the numbers. You can even select the property type. So I want to look at Richmond Hill townhouses. And this is the actual average price growth in the past few weeks. and then the actual market stand right there. And you can see that, for instance, the months of inventory for townhouses in Richmond Hill is about 1.89, but when we're looking at detached properties, the months of inventory is about 3 times as much as that. So townhouses are, they come and go, right? But detached properties stay longer in the market in Richmond Hill right now. If I want to compare that to, let's say, Vaughan, I will select Vaughan right there. Months of inventories for detached properties is 2.61. So Vaughan detached properties are selling faster, and you know why, they're less expensive. So these are the things that you can arrive at here as well. You can even look at lease prices too, so you can easily analyze the market for rents as well. So this is also a good tool. Community Watch is exactly the same for communities. So you can see the same stuff, same trends for communities right here. So if I go to, let's say, Aurora Village, these are the numbers. You see that? You see that gap right there? That's what average price does to you in a community, right? It goes down and up. One property sold for too low here, and it pulled everything down with it, right? So that's why average prices are a little bit tricky. You need to be very cautious when you're looking at average prices, but it actually gives you the idea right there. Okay, so let me get to the questions. We're almost 2 minutes to the end of our session today. And see how much of the questions we can answer right here. So Miguel, hey Miguel, thanks for joining us. So you're saying, is it possible to see 18 months to see the trend? So yeah, I understand what you mean. So right now here we have a 13-month gap right there, but yeah, it could be interesting to also have 18 months, so you could see the trends before in the last year as well, not just a point to point. It's a little bit of a difficult thing to fit into the graphs here. They'll be too dense, and for printing purposes and marketing purposes, it could be a little bit difficult. However, we would definitely consider and see if we can include more trends, at least in the reports that we are generating ourselves, so you can have a better understanding and be able to better understand. So, but thank you very much for your suggestion here. We'll definitely consider that there. Faride, you were asking how we got to the map. I'm assuming you are looking for this map right here, if I'm not mistaken. So that's under community report right there. So the heat map is right here under community report. You could go ahead and play with the indicators here as well. So 10-year growth, there we are for, let's say, detached properties. So we can see how much growth we've had over the past. So the lease was 26%, these guys right here, and the max was 200%. These guys right there, down here in the core, down here. So all that areas can be seen. And you wanted me to also compare Richmond Hill. So if we want to look at the market report, I can go ahead and pull up Richmond Hill. So we were comparing so if you want me to compare, I don't exactly know what you mean by comparing it, but if you want me to look at the market activity right here, I don't know if we already did that, but let's just quickly take a look at it again. So So obviously you can see there's a 20% difference between the benchmark price and the sold price. So that could indicate that the market is shifting towards the seller side a little bit here in Richmond Hill. I'm looking at different property types, but the growth trends pretty steady. So prices in Richmond Hill could be still competitive with the actual potential of the area. They still haven't gone up too much over the past few years. And then looking at the market activity right here, we would go to the areas. So if looking at August 2020, we have 843 properties on the market, 692 coming to market. So we're looking at the growth of listings here, and you can see that the blue and green were touching a little bit right here, but then the gap is starting to grow. We have to wait another 1 month to see how this gap will start to grow. But if they start to come apart, that means that some properties that came to markets, got stuck on the market. That could be an indication right here. And then we're almost selling less than a half of what's coming to the market right there. So I would still say that, Richmond Hill is still a little bit of a buyer's market right there. Compared to last year, the inventory was much closer to the, basically the new listings were much closer to the sales. So properties that were coming to market were selling last year. This is a little bit strange here. You can see that the situation last year in terms of new properties were a little bit better, even though the inventory was much higher. So there were a lot of properties on market, but there were less properties coming to the market as well, at least in August, where we had the sales there. However, you see the gap, how that grew. Sales dropped, and then the inventory grew, and then the inventory started to come down. Over here in December, they pretty much met. So that's where this situation started to change again. But then we had the growth again. Then in April, we pretty much met again. So that's where things were looking sharp and good. And then it went back up to the gap growing there. So I hope this was able to explain a little bit more for you. Now, Miguel mentioned in Community Market Watch, the data is missing for Vaughan. Let me see, we might, Community Market Watch. So we will see, let me see. We have to put up these files every 2 weeks, basically. And you could be right. We might have missed. So let's go all the way UV. Oh, okay. We do have the communities in Vaughan. Is that what you mean, Miguel? Oh, okay. So you got it. Okay. So it might have just not triggered. So you got it. So we do have the Vaughan information in there as well. All you need to do is click here and start typing. So for example, I don't know, if I want to go to Jefferson, I can just type in Jefferson, that's in Richmond Hill. Or for example, if I wanted to go to, I don't know, Guildwood, for example, I could just type in wood, and it's all, showing you all the stuff in here. So for example, Woodbridge, for example, if I want to type that in. So that's there. Okay. All right, so I think I have covered everything over here. All right, so thanks a lot, everybody. It took 6 minutes more than what we were targeting for. Thanks a lot for staying a little bit longer with me. So go ahead and use these numbers, look at them, send us, if you have any suggestions, please let us know. This is a difficult portion of the system to build for us. It's really difficult to compile the the buttons, well, the numbers here, but we're trying our best to be able to basically get these numbers in place for you. Now, for those of you who don't see the community market reports, this community report as well as Community Watch is available to our Business Master and Lead Master package subscribers. So you can certainly upgrade to receive these. So stuff like CMA, accounting, event calendar, and some more advanced features are available in Business Master and Lead Master packages. So you can contact us and we can let you know how you can upgrade, and also what other features and functions you're going to get with the upgraded packages. You can see what your package is down here. So if you're a Lead Master or Business Master, you should be able to see these functions and features. But if you are a webmaster, you're still going to be able to see the market report as well as the market watch, but not the community report or the community watch. So get in touch with us and we can help you see whether you'd like to upgrade to one of those other higher packages. I can also post you a link. You can go to this link right there. Remarketer.ca / I think it's prices. Let me just, their pricing. Yeah, there. So I'll take that for you. So you have all the packages available for you here. So you're going to be able to see the numbers over there. All right, thank you very much for joining me today. I hope you enjoy the rest of your day. Stay safe, enjoy the nice weather as long as it lasts, and I'll be with you again same time next week. Have a good one.